Most traders watching this don't actually have a bad strategy. They have a permission problem. They see a signal, they take it. A line crosses another line, they buy or sell, and they hope it works. Sometimes it does. And that's the most dangerous part, because the trades that works randomly are the ones that teach you the worst habit. Let me guess how you learn moving averages. Fast line crosses up, you buy. Fast line crosses down, you sell. And for a while, it feels like trading. Then the market starts trending hard, or it starts chopping, and suddenly does some signals bleed your account slowly, trade by trade. The problem is not the moving average. The problem is that you're reacting instead of filtering. In this video, I'm going to show you how to use the same moving averages everyone already uses, but with a structure that filters out ranging noise and counter trend traps before they cost you money. But you have to stay until then, because the default settings are exactly why this fails for most traders. Let's bring up a chart so you can see this clearly. On the screen, this is a gold 1 hour time frame. Before we talk about entries, indicators or signals, forget all of that for a moment. Look at the price. When the price consistently holds above a zone and candles keep closing higher, the market is telling you something. When price consistently hold below the zone and candles keep closing lower, it's telling you something else. This is not prediction, this is permission. Direction comes first always. Here's where most traders break everything. They jump straight to entries. They see a signal and react. But a signal without direction is meaningless. A buy signal against a downtrend is not an opportunity, it's a trap. A sell signal against an uptrend is not smart, it's noise. So instead of trading moving averages crosses, we treat moving averages differently. We do not use them as triggers, we use them as a structure. Think of them like a channel that price respects during a trend. And let me be clear about this. We never trade moving average crosses, not cross up, not cross down, ever. What we wait for instead is a pullback. Trend don't move in straight lines. They push, they pause, they breathe, and then they continue. That pause is where disciplined traders enter, and it's where impatient traders get chopped apart. But here's the catch. Not every pullback is a trade. This is where timing matters. Direction gives you permission, timing gives you precision. Below the chart, we use a momentum tool. It shows a histogram that expands and contracts as momentum changes. When the histogram is green and above the midpoint, momentum is bullish. And when it's red and below the midpoint, momentum is bearish. No guessing, no prediction. Back to the gold 1 hour chart. Price is clearly holding above the moving averages channel. That tells us the trend is up. That means one thing. We're only allowed to look for buys. Sells are off the table completely. Now price pulls back into the channel. During that pullback, momentum turns red. This is where most traders mess it up. They panic, they sell into the pullback, or they buy too early because they're afraid of missing the move. We do nothing. We wait. We need two things to align. Price must reclaim a strength and close back above the channel, and momentum must flip back in our favor. Watch this candle. Price closes above the upper band, but momentum is still red. This is not a trade. We do nothing. Then it happens. Price is still above the channel, and now the histogram turns green again. This is the momentum. Direction is aligned, momentum confirms, timing is precise. That is the buy. Now before anyone think about profit, we talk about survival. The trade that destroys accounts is not the big loss. That's the one where you thought just this once. I'll give it more room. You should never risk more than 1% on a single trade. No exceptions. Your stop loss goes where your idea is proven wrong. In an uptrend, that means below the most recent swing low. If price breaks that level, the structure you were trading no longer exists. You exit. No emotion, no negotiation. Targets are not random either. We're not guessing tops. We set the target at 1.5 times the risk. That way you don't need to win all the time. You just need discipline and alignment. Now let me quickly show you the sell logic using the same gold 1 hour chart. When price is holding below the moving averages channel and candles keep closing under it, the trend is down. That means we only look for sells. We wait for the price to pull back into the channel. During the pullback, momentum often turns green. That's normal. We wait again. When price fails at the channel, closes back below it, and momentum flips red, that's the sell. A stop loss goes above the most recent swing high. Target is again 1.5 times the risk. Same rules, same discipline. Notice what this does. Ranging market noise gets ignored. Counter trend signals never get traded. Most losing trades are filtered out before they even exist. Now, this is the part most people escape, and this is exactly why they copy strategies and still fail. The indicators are free, but the default settings are the trap. Here's the exact setup. The structure on the chart is the moving average channel. In the settings, the upper length is set to 100. The lower length is set to 200, not the defaults. These settings are what smooth out noise and define real structure. The momentum and trend confirmation tool below the chart is the squeeze momentum indicator. In inputs, the Bollinger Band length is set to 45 and the clutter channel length is also set to 45. Again, not the defaults. Once we apply these settings, the chart becomes clean, direction becomes obvious, momentum becomes readable, and entries become disciplined instead of emotional. This is not about predicting the market, it's about alignment. Direction decides permission, momentum decides confidence, signals decides timing, risk decides survival. Apply this exactly as shown. Hit the like if this helped, subscribe if you want more structured trading strategies, and I'll see you in the next video. Happy trading!